Good morning. Today is Friday, the 20th of August, 2021, and I'm Steve O'Hare from Signal Centre, and I'm going to run through the markets, what's gone on yesterday, and what we're looking at today from a technical perspective, and also maybe a little bit of fun later with the gun to head, and then the day ahead. So let's get started. Highlights from yesterday, we've got let me see. So mixed session overnight in Asia, despite a recovery off the lows for Wall Street, while the Dow was still in the red. By the close, the S&P managed to move into positive territory. Also, Nasdaq had a little bit of a push higher. Dip buyers obviously swinging into action again. However, across Asian markets, they struggled, and we can have a look at the technicals on that in a minute. European markets fell sharply yesterday and are expected to remain under pressure. But with the Jackson Hole meeting a week away, most investors will likely sit on the sidelines and await further developments. Today is mostly empty on the data front, although we've got some option expiries, which normally leads to excessive volatility. Corporate highlights today: Morrison's have accepted an approved $7 billion takeover from Clayton, Dubilia and Rice after receiving assurances that the bidder would not sell off its stores to raise cash. Marks and Spencer's have upgraded profit guidance for the year. It expects pre-tax profit to be about above the previous forecast of 300 to 350 million, thanks to recovery in clothing and home sales, along with strong performance in its food division. I think it's mainly down to the food, to be honest. The food's great there. So let's take a look. Let's dive into the market straight away. I'm going to start with dollar index. Just realized you haven't been seeing my charts, so let me just show you these again quickly. Go over the see, where's Joe when you need him? So dollar index, this is the double bottom formation breaking above the resistance level here, 93.61.5 trading now. Next stop 94.74, looking very positive there. Extended move higher takes us to the 61.8% fib retracement level. Euro dollar, this corrective formation we're in, 116.12 is the line in the sand, really. A break below there, and the fireworks for euro dollar, really. Fireworks that are coming down. On the cable front, we've got the support coming in around about this 136 level, and as you see, this potential double top formation, if we manage to get a close below that neckline, shows an extended move down to 130.80. Dollar yen has broken above this long-term trend line and remains sideways congested, but potential for a move higher. This is the inverse head and shoulders I was talking about, which is a little bit mid-range, but there's the potential for the measured move up to 112.40, but really need to clear this level here. Really need to clear above 110.80 would confirm it for me. Cryptos, quickly run through it with a chart, so it makes a lot more sense. And this is what we're seeing. We're seeing this measured move target potentially to just above 50,000. A couple of other resistance levels around about 52,000. Ethereum stored at the 61.8, and Ripple, similar price action to Bitcoin, really, stalling around a 50% retracement. But Cardano, wow, look at that, baby, all-time highs, 255. So we've caught up then. Let's take a look at commodities. Let's take a look at oil first. Oil has broken down below the long-term trend line, which we see here. Bang, bang, bang. We retested that trend line and it has failed, and we're moving now towards 61.50, which is the next line of support, which is a swing low below that 57. Maybe psychological around about $60 would also prove supportive. Price action yesterday formed a bit of a bullish hammer, which is positive. But on the 4-hour chart, we've got a short-term downward trending resistance line, and we're looking to sell into that on a daily basis. Gold, similar sort of thing. This sideways price action, I mean, you could say it's potentially forming a little bit of a channel You know, I like gold on a medium-term basis, but I'm just trying to play devil's advocate and say this reaction we got down to the 1679 level may be retested. But I think if we get a clear break above the $1,800 and a close above there, especially on a weekly basis, then that would say to me that we've retested that low level and we're happy with it. We formed a bullish hammer on the weekly chart last week, and if we can extend higher, really above 1800, and then the next target level would be 1835. But a close above 1800 on a weekly basis, I'd really like that in gold. That would sort of say to me, that'll give me an early sign that there is potential for the extended move higher, which we do believe will eventually extend up to 2,500. Right, taking a look at indices. Let's move away from the weekly chart. Take a look at the dailies. We can see FTSE has been hit pretty hard since the high at 72.35. We managed to stick a low in yesterday, 69.92, just below the 7,000 psychological level. We've got support from upward trending support line coming in around about 69.20, even further down, and looks like we are under a little bit of pressure this morning. This is what we've seen in terms of the 4-hour chart recovery, bullish hammer, morning star formation, but this looks to be failing. A morning star formation would normally lead to an extended move higher, and it's failing at the moment. So under a little bit of pressure as we open up the doors on Europe morning. So low yesterday in DAX was 15,623. We managed to pull back to this pivotal support stroke resistance level, keeps changing its mind at 15,805, and now under pressure this morning. We can see in the last hour on this chart that we have moved higher. ATR weekly bands, pretty good bands if you're trading on an intraday basis. That gave support of 15,653 and resistance of 15,815. So for me, that this is the level really to watch, selling into rallies to there. And I'm a little bit bearish on indices, as you all know. So I wouldn't be buying it down at the bottom of the bands because I don't like buying it. So same sort of thing on the Dow Jones, really. Let's look at the weekly chart because this is what we'll be focusing on Monday. Depending on where it closed, that's a bearish outside candle. That's really a major concern after posting an all-time high of 35,629. That would, especially if we can get a close below this bar from 3 weeks ago, that would be a major concern and really open up a potential move to the downside. NASDAQ is got some really toppy looking candles. Yeah, but we still sort of haven't managed to force an all-time high despite this positive price action. That's a hanging man candle last week, and this week is a bearish engulfing candle. Bearish outside candle in S&P is very similar to Dow, so that's ominous, but we're still in this ending wedge. Really need a clear break of the 4,330 level. We will find support below, and there will be dip buys like we normally get, but on a more medium-term basis, it's looking a little bit concerning for the US indices. Aussie 200, similar sort of pattern, bearish engulfing on the weekly chart. China under real pressure and really homing in on this 14,700 level. For me, a break below there, and it's sayonara, baby. Hang Seng has breached the low from 3 weeks ago. So this is the 4th week. That breached to 24,740, but it is trading just above there. Again, that's been dragged down. And the Nikkei breaking below the support that we've had in place and really under pressure there. So that isn't looking too clever at all. So let's move on to gun to head challenge. After analysing the markets, I normally have my go-to market, which is gold normally have, but I feel that that is a bit of a flip today. I would like to set it up at 1795. 1786 is a little bit mid-range for me at the moment. Taking a look at oil, we seem to have found a little bit of a bottom, and I'd like to sell it a little bit higher. And again, I'm bearish on it, so I don't want to be selling it at these levels. I want to sort of stick to my instinct on that, really. Aussie dollar bearish, dollar yen. Dollar yen for me, we're not far away from our intraday trade idea, which was to buy it. So maybe I'll go with that. The intraday trade idea has the stop clearly below the 109.12 swing low. For an intraday trade idea or a gun to head challenge, if there's gun to head, what will I do now? I would probably buy this. So let me just hit the buy button on there. That would be it. I'd be buying it at 109.65. I want to get a decent risk reward, so I'll have a 20 tick stop, 109.45, and I'll be targeting a move to is that too high? That's too high. Yeah, what about a move to this swing high here, 110.25? It's a 3-to-1 risk reward on that, on the dollar yen. So thanks for joining me today. The day ahead is very quiet. There'll be a lot of waiting in the wings, really looking at focusing on Jackson Hole next week. Hope you've had a good week, and I hope you have a good weekend, and I'll see you on Monday.